Good afternoon, ladies and gentlemen, and welcome to this week's review session. So, as I put in the note earlier, firstly, apologies a little bit earlier. I just not, from a trading perspective, the day isn't going particularly well. So I think I'll start the weekend a little bit early and, give myself a break and spend some time over the weekend looking at the markets. Obviously, my approach over the last couple of days hasn't been right. Today what we've seen a sell-off that across the European markets and then again across sterling, which is largely Brexit led and the fear of a no deal. It will be interesting to see what the US markets do when they start trading in about an hour's time. I am expecting them to recover. You might not see quite such a strong recovery in the European markets, but with the Dow down at 29,860, we have been down to 29,714. I would expect the market to recover from this point. Obviously, the news overnight was largely in relation to the stimulus again, the fact that the deals continue to get stalled somewhere between the Democrats and the Republicans. Some weeks it's the Democrats, other weeks it's the Republicans, but still there is no deal being announced, no monetary value being agreed. And as much as everybody, including me or none more so than me, expects the deal to go through, the timing of that deal remains elusive, and we see the markets in some form of disarray. Obviously, for somebody who trades the market traditionally in these areas from the short side, I'm playing devil's advocate with myself a lot this week and trying. I think what's one of the things that may be occurring to me, and sometimes I hear this from some of you when we're talking about the ways that you trade the markets, is there is too much noise at the moment, or I am allowing too much noise into my trading decisions. And for somebody who traditionally would be short and short and short at these levels, and certainly from 30,300, and partly being conscious of the rally that we saw last Christmas and just before Christmas, and being wary of that, I've talked myself into a situation where I've been long the equity markets, long sterling as well, in the anticipation that a deal is going to get done in both locations, so both a stimulus deal and a deal in relation to Brexit as well. So, unfortunately, I've been wrong and badly wrong over the last couple of days, and I think it is, we're going back to a few comments that I've made over the last few weeks in relation to the my review of the week and trying to, acting more on what I think rather than what I see. What I see is I see a market that's inflated, that the valuations are difficult to justify, and I would traditionally be short at these levels. Obviously, from a day-to-day perspective, in terms of the size of your trade and the amount of movement that we're seeing in the indices, you would, sometimes it's impossible to hold the position for too long. But when you look at the Dow, and I'll just bring the Dow up quickly and give you a couple of ideas for this afternoon. Obviously, I'm not going to be here. I've put one trade on, and I'm going to continue to hold that trade. But you can, if you look at the top, I'll just take this. Let's see if I take it down, it might disappear. So we're just looking at a 15-minute chart here. So you can see the top red line to the top is the high that we've seen, the record high that we've ever seen in Dow futures, just above 30,300. I was stopped out at that level on Wednesday, I believe. And then from that point, we've seen a reasonably healthy correction. We're down the best part of 400, and we have been down a little bit lower. So we've been down the best part of 600 points during the course of today. So a correction, it's not, there's nothing to worry about in terms of the size of that movement, and it does give people the opportunity to re-enter the market. just a few lines I want to draw in here, just in advance of the market open. And I will look at this. I won't be in the office, unfortunately, but I've decided to finally finish off the Christmas shopping, and take the break that maybe I need at this point. So there's a couple of lines going in here. Now this is a 15 minute chart, so I wouldn't be looking at anything else, anything else or anything shorter than this particular period, but obviously we're only going back to the end of November here. So there's a question there from Peter, saying surely long is okay as long as you don't mind waiting even for a couple of days. I mean, you know, my gut feel, Peter, is that is correct. I think the stimulus bill will come. We're dealing with an animal, Donald Trump, that is, maybe that's a bit nasty in terms of a comparison. We're dealing with a person, Donald Trump, that it isn't entirely rational and normal in terms of the way that they think about things, and he's obviously still slighted and feels damaged by the defeat that he suffered in the election. And I would imagine that for the type of person that he is, for the type of personality that he has, that still rankles, and it's difficult to come to accept. So the rational part of me, the glass half full side of me, thinks that he will get the stimulus through. I think everybody, doesn't matter what side of the fence that you sit, will agree that it is the right thing to do. But sometimes, you know, you can become very blinkered, that you can become very blinkered to what's going on around you, and just focus on the things that are immediately in your vision. So, you know, as much as everybody might think it's the right thing to do, there might still be that stubborn bone within Donald Trump that means that, you know, he isn't going to be able to find the middle ground that everybody is expecting to find. So everything rational and positive about me says that a deal will get done. But if he gets caught and you push, it's like prodding a bear sometimes. You might get away with doing it once or twice, but if you continue to do it and you push too hard, you might just get a reaction that is not beneficial and aggressive. And I wonder, there's probably 30 odd days left of his tenure in the White House. I think it's somewhere around the 21st of January that he will vacate the premises finally, and up until then there is potential for a bit of stonewalling to continue. So whilst I would expect this to happen, you'd expect it to happen pre-Christmas. Obviously there's going to be a lot of families with the CARES Act, or parts of the CARES Act coming to an end. You'll have the government potentially going into shutdown, because they won't have enough money to fund the government. So they've been trying to marry these two things together to get them passed at the same time. So you would expect it all to be done before Christmas. You know, I think anybody with any form of emotion in their body would feel that it was required to be done by Christmas, would do it. I just think Donald Trump potentially is the one person that won't, or he won't allow the government to do that. But we will see. So for a couple of days, obviously it's the weekend. I do think the Dow, the movement that we see in the Dow today is very much related to the lack of stimulus, the movement that we see in the broader markets in relation to what the DAX has done, and also what sterling has done is more in relation to Brexit. So please differentiate the two a little. You do see a slight differentiation in the movements that we see in both the euro versus sterling, apropos as against how they're trading against the dollar. And then there are differences in the way that the Dow and DAX have been trading throughout the course of today as well. So just to further augment the answer there, I think the Dow has the potential to rally from the levels that we're currently seeing, and just around the opening bell. Just whilst I'm talking about this, so this is a 15-minute chart. From an oversold condition, we're kind of back into the mid-range. You look at a 30-minute chart, an hourly chart, we're picking up from those oversold conditions. The 4-hourly chart will suggest that we're still moving down towards 30. So I would be just going to bring this back up to a 15-minute chart, but you can see where we've been to as a low today, 29,712. You can see there the previous lows on this last movement down back on the 2nd of December to about 29,587. Just with the way that the markets are marking up there, we are at the lower end of the range today. Let's not forget, first thing when I woke up this morning, the Dow was trading and was looking strong. It was trading at 30,050. The sterling had rallied as well, and certainly lulled me into a false sense of security. And ran trades a little bit longer than they should have done, and should have cut a little bit quicker. But ahead of the open, I think the bias for me, what we saw yesterday was we saw a sell-off, and then we saw a rally from that point. I'd not rush into the trade this afternoon. I'd wait for the bell to go, and then look at how that first initial trading is. If you see selling coming back into the market, I'd look for the market to get down to 29,700 before I look to buy. If the selling is gathering pace and you drop lower, 29,587 from a buying perspective, and I'd look to certainly get long at those levels. So if you're long already, obviously we have the weekend ahead. It would be my preferred position. I have no position on at the moment in either of the indices. But if we fall back to 29.7 and then 29.587, I'd be looking to enter the market at those points and look for a decent move higher in anticipation of the stimulus arriving. Who knows, it could arrive this afternoon. We could get an agreement and we pop up 500 points on the back of it. Equally so, once the move has finished, let's look for opportunities to short the market at those levels. The one trade that I do have on is sterling. I bought sterling about 10-15 minutes ago at 131.49, 131.50, somewhere around that level. Don't have the exact level in front of me at the moment. Just looking at let's start with an hourly chart. So there's nothing there on the hourly chart, but on a 4-hourly chart, you can see a couple of levels where we've seen support previously. So you've got, this is the second one there around 131.06, so just before the big figure. And then equally so, we've seen a bit of resistance that also turns into support just about where I purchased, so about 131.50. So what I'm looking at here is the way that we've rallied away from this level, not gone back to it. We're currently back at it at this particular point, probably trading just above it at the moment, 131.65. Equally so, it was resistance here when we traded back in October to this level. Equally so here, we didn't reach that level, but eventually broken through here, tested it again, and then have flown higher from that point, and we've retraced much of that movement. So 131.06 would be a level where I'd be looking to get long the market. There is potentially a bit of movement again back down to the downside to about 130.60. But whilst the trade is aggressive, again it goes back to comments that I've made already in relation to Brexit. As stark as it may look today, we have a deadline of Sunday. There will be negotiations ongoing. We've seen some comments from the Taoiseach here in Ireland that says 97% of the deal is agreed. I just think that again common sense will prevail. We are dealing with the European equivalent of Trump in Boris Johnson, but I have to believe that common sense will prevail and that we will see a better deal than is, or a fuller deal than is currently being agreed between the European Union and the UK. So this is this is a hold trade. I might put a stop in down at the level here, so 130.64. This was resistance at this particular point, resistance there. Moved away from the market at that level as well, so maybe somewhere around 130.60, 130.50, just to cover a bigger movement to the downside. But I do expect us to move significantly higher from this point. If we do see agreement, there is no reason why we couldn't be trading back at 135 at the early part of next week. We are picking up as the foreign exchange traders in the US take over the trading at this point. So we're at 131.72. Question mark now, do I take profits? I might take profit at 132. It's a big trade that I put on. So I might take profits at 132 and then look to get back into the market. But as with Peter's comments about the Dow and holding for a couple of days, I think at 131.50 sterling is a market that I want to hold for a while. I think it's a trade that I want to be long over the weekend and see where we are on Monday morning. I suppose it all comes down to how you think the negotiations will pan out over the next 36 hours. So that's really all I have for you today. Gold, I've left it alone for the last couple of days. Looks like it was a positive decision. It's been, we are trading in a reasonably tight range here on the 4-hourly chart. You can see over the last period we've had a movement up to 1870. Which was immediately corrected back down to the same level. So we seem to be in quite a tight range now, between about 1825 and 1845, with something required to push us out of those levels. Thank you very much for joining me. I will be back in on Monday as usual, rested, hopefully, and more positive in terms of the trading. There's a few things for me to look at. I'll share those with you on Monday. And if anybody is looking at the free Telegram offer for a period of time, for the 3 weeks period, please get back to me over the course of the weekend, because I will be sending out all of the details for those to the people who've requested them. Thank you very much for joining me.